Hi, everyone. Welcome to our next segment of 2 Minute Tuesdays. I'm joined here by Seth Weissman, founder and managing partner of Urban Standard Capital. Seth, thanks for being with us.
Thanks for having me.
Maybe just a quick intro about Urban Standard and what you guys do.
Sure. So Urban Standard Capital is a middle market real estate private equity firm with both debt and equity investment strategies.
So today we're going to be talking about the debt market, right, which is a big part of your business. And really, how is that shaped over the last, let's call it 2 years, from 2020 even till now, right? How has it changed and where are we today on the debt side with real estate?
Certainly been a volatile and interesting 2-year period. I guess it's sort of coming out of COVID and obviously, what is it now, 10 or 11 Fed rate hikes later.
Too many.
Has disrupted a lot of business plans. I think the steep and sharp rise in rates was probably unexpected for a lot of people, especially on the equity side. On the lending side, with a primarily floating rate book, our rates have gone up 50 to 100%.
Sure.
So generally, it's been a net positive for us. And I think the biggest general trend, and we've sort of seen this coming out of the great financial crisis, is the sort of growth in the market share, growth of private capital.
Yeah, I mean, you've definitely seen a rise, I would say, in the private debt market, right? And the opportunistic ways that you can create an investment opportunity, right? Find yield where yield wasn't. And debt was a way to do that, I think, and give opportunity for real estate owners to maybe take on a debt position, or in your case, have both, right? And in the event you REO, that's not ideal, but you have a platform that can serve both, right? So definitely unique. Okay, so now the magic crystal ball question, right? Where do you see the next 6 to 12 months going? And knowing that we're in still a volatile market, in my opinion, how do you see the outlook?
Sure. I mean, I personally anticipate that there will be a recession in the later half of the year and going into 2024. The depth of it is sort of TBD. It's just a fundamental shift in the capital markets and the investment markets, and what made sense in early 2022 doesn't make sense today, and that's driven by the fact, the risk-free rate is now almost 4%.
Right.
And so what do you need to get as a return if you're an investor to warrant taking liquidity risk, private markets risk, just equity risk generally? Obviously it's higher, but how high? And that's going to depress pricing. And so I think, you start to see opportunities come from that distress and resetting of asset pricing, but probably toward the second half of this year. Right now, we're just seeing a lot of equity operators and developers focus on taking the water out of the ship, if you will, and trying to stay afloat.
I couldn't agree more. I do think a recession is on the horizon. The question of how long, I think, if we would know that, we can time the market perfectly, right?
Yeah.
So, and then we'd make some real money. So, the reality is, I think we'll see what happens, and to your point, maybe there's opportunities that come out of that, right? From a real estate perspective, and timing it somewhat in the right spot could obviously help. So, Seth, we appreciate the insight, and thanks everyone for joining. And that concludes another installment of 2 Minute Tuesdays.